the yield curve has inverted at the 20 and the 30-year level, and that's always, it starts longer term and then it works its way down the food chain. And a yield curve inversion always tells of a recession 12 to 18 months out. And I think that, and there's only one way to fight recession, and that's with inflation, and we're already running hot. So I think that will make it very obvious to people that we've entered hyperinflation. Well, here's the thing about black swans. Black swans are things that you cannot see coming. So I don't know that there are other black swans that I see because you can't see them. Honestly, really was freaked out by the yield curve inversion, because you guys might remember, if you've been watching me for a long time, that we had a yield curve inversion. What was it, December, I think it was 4th or something like that, of 2018. And it was, we entered that next recession almost to the day that the market foretold. So I think we've already had that black swan that nobody else is talking about. Have any of you heard about the yield curve? No, they say, oh, if the Fed raises rates, this is the short-term rates, then they might put us into a yield curve inversion. So that's really how I saw it, because I'm reading this headline and I go in, I say, all right, let me pull up the rates, let me see where we're at with that, right? And then darned if I didn't see the 20 and 30 year have already inverted, and it always starts on the long term and works. So if you're asking me really what do I see, if I had to look at one thing, but do I think that we are potentially entering war with, between Russia and the Ukraine and the U.S. involvement in that? Yeah, I can definitely see that, because remember, as they're doing this transition from one kind of currency into the next, right, that one of the things that always happens is a war. And it's a way to justify ratcheting up the spending again, which they're having trouble justifying it now because of the inflation, right? But wouldn't our involvement in a war justify that? Of course it would. So what I'm really seeing are a lot of the kind of indicators that you always see as a currency is dying and they're putting the next one in place. What do you think about these big, huge swings, right? Yeah. Do you think that that's dip buying, which is what they want you to think? Or do you think it might be the Plunge Protection team, because if they allow it to really unfold, that's going to scare people out of the markets? Do they want you to pull your money out of the markets? Heck no! They want you to keep it in there, because that is so easy to take away from you. And who are you going to blame? Oh, I shoulda. Who are you going to call? Right? Ghostbusters? I don't think they can do anything about it. But you should call us. And I'm sorry if I'm being this direct, but I got to tell you, when I saw that inversion, it freaked me out. And you probably remember how freaked out I was before, when there was this whole series, and it wasn't just the U.S. that was inverting. And I'll bet you if I look at other countries, I'm going to see the same kind of pattern. Because the only way to fight a recession is with inflation. And we're already running, well, they want us to think it's 7%, but what's your pocketbook telling you when you go to the grocery store?
I mean, rents were up 17% last year. That was just one... That's just one indicator.
Exactly.
Home prices were up 27% or something.
Exactly. And the home prices have not yet filtered through to the inflation numbers. And what are you going to do? Take wages back? Oh, well, yeah, okay, well, we just gave you this raise this year, but now we're going to cut your salary. That doesn't work. So, and the central banks are still acting like it's transitory, even though it hasn't been transitory since 1913. Before 1913, yes, there were times when inflation would be transitory based upon where you were in a real economic cycle. But once the Feds took over, then what do you have? You have planned crisis. And their job is to regulate the rate and speed of inflation, and they lost. And if you stop and think about this, right? They talk about raising the interest rates maybe 4 times this year, right? And they're going to do it. Shock and awe. which means 0.5%. But if they did that, and if they did that 4 times, that would still only take us up a little bit more than 2%. If you want to believe their 7% numbers, well, guess what? You're still in negative yield if you have any asset that's not yielding you at least that 7%.
Right.
Can you buy a treasury bond at 1% when inflation's running at 7? You're at minus 6%. So, first of all, interestingly enough, they have to raise interest rates because if they don't, they have lost all credibility with the public, right? And on this little dog and pony that they've been doing on, well, we're going to raise the interest rates in March. We're going to raise the interest rates in March. We're going to raise them. Well, I've been talking about that since November, right? December, January. I mean, are you kidding me? This is really about letting the people that matter to the Fed, which is not you and me, get into position so that you and me, not me personally because I don't invest in that garbage, but the people that do dutifully put their money into their 401k and their IRA and their mutual funds and their ETFs and their annuities and all of this fiat money garbage. But as long as somebody else is making those investment decisions, those institutional investors, well, we've seen it. I've shown you where the big money is getting out, but the small money is picking up that slack. So who's going to eat it in the shorts? You better have enough. If you're counting on these fiat markets to fund your retirement, I think that's a crappy idea. I mean, you do whatever you're comfortable with, but I would not be counting on that. Not even a little bit. Not even a teeny weeny bit. I mean, wake up while you still can. Because once you see it, it's too late. When the public really understands that we're in a hyperinflationary phase, it's too late. It's too late. The time to get prepared is now. Food, water, energy security, barterability, wealth preservation, community and shelter. Please get it done. The bail-in takes the eminent domain laws and really says that the government can do anything they want. They just have to pay you fair market value, which of course they then determine. In the bail-in laws, while they've changed a lot of the other laws that were issued in Dodd-Frank, the bail-in laws remain, and that means that an institution, a bank that is failing, can take your money away from you. I mean, that's the bottom line. They can take your money.